Here is the all share on the weekly time frame. All right. So when I make the weekly time frame, I mean that every of the candle or every of the price action that I'm looking at here is actually 1 week of data what's it called, representation. And the last candle we are looking at here is actually this candle, which has the highest body close. So we are now trapped under it. But let's see, is this actually this downswing? Is it a value swing? Yes, it's a value swing because it closed above that. And we still have some rejection under here. So let's mark those swing. This is a swing point. Let's mark the swing point here. Also a swing point. So the market is actually trapped in that range. And this range, we call it a valid range. So let me use my trend line channel just to know the midpoint of that price. So that midpoint should be somewhere there. So for this, so two things are likely. We still have this zone to battle with. If the market is going to continue this bullish move, it has to close above here. That means the bullish move that took up from that's around April. So this move started around April and started having a higher close, higher close, higher close until we got here that we now have a swing. So because we have a swing point here, and this is the value swing point, this is the midpoint of that swing. If we are going to trade the index, we're looking for a retracement back here. If the market should retrace back into this place, we use it as a buy for a first entry. So if it bounce off it, then we look at here for targets or here for another target. If the market now breaks above here, then we now start measuring extension, maybe from where it started from to where we have another value swing here. We can now measure the extension. How far can it still go? It's like driving on a high speed and immediately you now slam your brake. The car is not going to stop suddenly. It's not. It will still move for a while. So that movement is now what we want to trade now. It has already applied brake. The brake is here. So let's see how far the momentum can push this price up. And note one thing, we are going to use this momentum to close our trade. We are no longer optimistic. We are no longer hoping that hey, this bull runs wants to continue. We actually want to use this move to close our trade. So that is just for the all share index. So let's look at the banking index. That's NGX. What's it called now? Is it banking? Hope I'm able to find this easily. This NGS insurance, I think. Okay, where's NGX banking? NGX oil and gas. And oil and gas also is forming a support. Let's look at that oil and gas. See that we are having a support in the oil and gas. Where is it? Okay, see what market did. And I like this pattern. I like it so much because one, it has formed a low. Now we find another low. Market has come to tap into this low and form double signal. So even the oil and gas is good to go this week because we have a double bottom now. This is a bottom and this is another bottom. So we are going to target back this high. We are going to target back this high. Let me reduce this. So oil and gas also is going to be a good uh, stocks stock to watch this week. Okay, so oil and gas too is good. But I want us to look at the banking. Where's the banking index? This pension, premium, growth. Sorry, where's the banking index? Okay, let me search for index. Index. Where's industry, insurance, 30, 50. Okay, banking index. Let's see what is happening. Okay, banking index is also trying to find support inside this candle. And this support, we're actually going to use it to buy back to this high. That's what we want to do. We are going to buy back to that high. We are not going to hope. Even if we are going to hope, let's measure with Fibonacci retracement. Let's say the market wants to extend. How far can it extend? So if it breaks here, it can extend to this level. That's 1.272 extension, which is possible. It now depends on the strength of that momentum, whether it's going to push to that high. That's another possibility. But we are not going to be hopeful. We are going to take our target at that price. So let's pick the banking stock one after the other and see uh, where the opportunities are. The first on my list, although I gave out the trade last week, during the week I gave out the trade, is Zenith Bank. So for Zenith Bank, let me just give us the idea behind the trade. So for Zenith Bank, we have a close now that is what is higher than the last week open, if not higher, but almost the same height. You can see it's like they close at the same height. And if you look at the candle very well, you will see that this candle does not have retracement above, and this other candle also does not have this retracement above. But we have retracement below here, we have retracement below here. So I'm very positive in this stock that is it wants to go back and test that previous high. And the previous high we are looking at is between, let's say, 76 and 78, maybe that zone. That's where we are going to trade it. And if you now want to enter now, so it now depends on how you want to strategize your entry. Me, I like entering as low as possible to the opening of last week. So if you can get it at the opening of last week, very good. But the way the price action is, I'm not sure the opening of last week is possible. But let's say we get it at the average, which is the midpoint. So the price we are looking at for entry for Zenith is going to be 66 naira. If we get it at 66 naira and target the, let's say we are targeting 76 naira, so that return is going to be like 16% for a risk of 5%. So for 5% risk, you have 15% return. That's 1:3, which is good. Which is good. If time permits, I'm going to also do a simple calculation how we can now manage that risk instead of looking at it in percentage. So what is actually the value of the risk? Let's say I want to trade this stock now, but I don't want to lose more than 10,000 naira in this stock. So how do I calculate how much I should invest based on this risk that I calculate? It's a 5% risk. I'll still come to that. So which other stock should we look at now? Let's look at Access. I'm not sure Access really pull back that much. Okay, even for Access, but my challenge with Access, Access did not that it did not close to this high now. Unlike Zenith, Zenith closed almost the same, what's it called, the same opening for the previous week. But here on Access, we have a slight retracement. We look at it very closely. We can see a very minor wick above, wick below, but wick above. The previous week did not have wick below. We did not have wick above. So that's to tell me if I can get access, if you want to buy, let's say I have average of this. So for that average, what is the risk? The risk here should be somewhere around 3% risk for what return, let's say 8% return. This is actually too close. It's too close because of the risk. The risk is like 3%. And if you are paying, if the risk is 3%, and you're also paying 3% for commission of buyer, in fact, almost 5%. So 5% plus 3%, that's like 8% you are paying on this, and you are not targeting like 9%. it's not really going to be a good risk to reward ratio trade here. So I would have loved to just avoid access as it is for this week. So if anyone has any stock that you want me to look at, but make sure that it's banking stock. Banking stock. So which other banking stock do we have? Let's look at Wema. Wema did not, the buy here is too weak. So maybe this week we can still see a drop lower to somewhere here. So this buy pressure is actually too small at that level, and it's too close to the roof. We want to buy as close as possible to the floor, then sell at the roof. But now the price is almost hitting the roof. So I would love to just avoid this stop now. I will avoid this. So let's see.
Oh, Sterling
All right,
and Fidelity.
Sterling and Fidelity. Okay. So for Sterling, yeah, Sterling also is hitting into resistance and see the low that we are looking at. So we are almost like at the midpoint of the the bullish most important candle here. So what I would say, I would have loved if this stock can retrace lower. But the most important bearish candle, if you are going to consider it, although we don't have anyone yet, because it did not close below, is this. It's not important. Assuming it closed below here now, I would say it's important, but it did not close below. So whatever is happening now, this price action is actually happening in this candle that was formed around August. That's Monday, August. So that's when this candle started. So that is what is happening. So whatever is happening is just that same Monday, that August price action. That's what is driving this market now. So for this, it did not really pull back. If you have it, you can hold it. But for a fresh buy, it did not really pull back for opportunity to buy. That is the way I will analyze it. Assuming it pull back to somewhere lower, would have been a good trade. That would be like a 10% risk on the trade. But as it is at this current price, the risk is more like 18%. But let's just say 16% for 12% target. This is not a good risk reward. That's for Sterling. Then what's the second one that was mentioned?
Fidelity.
Fidelity. So for Fidelity, Fidelity did not pull back. So you can see that it's also a struggle. So if you had Fidelity, let's say you bought around here, or maybe around here, and bought around here, there's really no pullback yet. But if you ask me for Fidelity, I think it's getting weak. Market is struggling to have a higher high. And when this happens, the trend is weak. That's what it means. You look at what happened. We see a value swing here. We saw another value swing here. We saw another, this is not yet a value swing. So if market is struggling to have a higher high, and we are seeing momentum fading, this is momentum. It's actually fading. His print is coming lower. Then price is going what? Higher. But it's struggling to have a higher high. Each time it taps into that high, it taps into another high. So this is more like a divergence. So if this is a divergence, where is the neck line for the divergence? We are looking at one leg here. In fact, this should be my neck because this is the higher high that will be considered for that, considering for the divergence. So let's measure what that should look like. Fibonacci retracement from here to here. You see that the market did not really pull back. And for us to buy, we need market to give discount. Pullback is like a discount. So the market did not really give us discount. If this trade can come as low as this 50% here, then we might consider. but its price is still at a premium. We want to see discount. There is no discount yet. So for this, there won't be any new trade entry. But if you have the stock, you can hold it and hope that it's going to break again and touch 24 naira, or break again and touch 27 naira. That is the analysis for Fidelity. So which other one are we looking at? I'm seeing Jais Bank here. So for Jais Bank, okay, for Jais Bank, what's happening is that market prices actually, what's it called now? Is this a value swing and is now struggling under. If you look at it very well, there are rejection here. So let's measure that rejection and see where we can enter. Because we have multiple rejection, this week might be a week for a buy. We have 3 bearish candle there. So let's look at it this way. The lower the better, but even if you didn't see a lower price, let me see if this is going to be a good risk reward. Let's say we are even risking it to this low now. This 13% risk for what return? 26% return. So for Fidelity, if you get Fidelity at a discount price around 4 naira zone, let me mark that zone. But let me mark the entire zone like this. Let me remove my risk reward too. Already I know. So this is what it's looking like. If I can get Fidelity 4 naira 20, 4 naira, between 4 naira and 4 naira 30, this zone is actually high for that particular trade. And remember, we are close to a what? A support. This is actually a support. Even if market breaks this support, it still has this support to battle with, which was the previous resistance. And the way price moves is that it moves in compartments or in apartments. So this is like, let's say floor. Let's say this is second floor. So we now have the third floor here. So what it's going to do is to use the roof, the second floor, as the floor for the third floor. So that's another confluence of support. So for this trade, we can actually take it if you see a discount again into the zone. So that's the analysis for Jais. But let me put the risk reward there. There's a reason why I'm putting it there. So this is the risk reward for this. So which other one are we looking at now? We check Fidelity, no trade, MPF. So for MPF, MPF should have been a good entry when it was tapping into here, this 2 naira 80 kobo. But as it is now, if you can get a discount, I would prefer to have a discount in this trade. It's too, if you enter here now and you are risking to this place, see the target, see the risk. The risk is 17%, target is 14%. It's too close to the roof than to the floor. But if we can get maybe a discount to somewhere around here and get 2 naira 90 kobo thereabout, it's now becoming attractive. Do we still have anyone? Let me check. Nigerian Brewery and International Brewery. This is not a banking stock. Let's stay on the banking lane for this week. Let's stay on the banking lane. Which other bank? Let me go and check again. Zenith, Unity Bank, UBA.
FCMB.
This one has become flat. I think they're on suspension, I think. So FCMB. Do we have discount? Not really, but is it still possible for us to take this? We are entering into, okay, into a support. This was a previous support about to be made, no, previous resistance rather, about to be made support. So what do we need for confirmation? We actually need a close above here for confirmation of that trade. But last week candle is actually a good one because market tapped into this low and formed uh it tapped into the low. Then we have a candle, bullish candle that has a body, but the wick came down. So let's see the candle that we are okay. This is a buy signal. If this is a buy signal, let's extend the momentum for this candle and see what the market actually tapped into. See that market tapped into the 50% retracement. So let me mark that zone. That zone should have been a perfect entry for that stock. All right. Okay, so if we are able to take it as close as possible to this place, is better. And what's that price? Below 10 naira. If you can get, let's see below 10 naira, 10 naira 50. From 10 naira 50 down is good. It's actually at a discount price for the last week candle. So let's see another thing that I'm looking at. What's the risk on this trade? 6% for a target of 17%. Okay, is it worth it? Yes, I think so. I think so. I think it's worth it. Any other one? Let's see. NNF, then UBA. Northern Nigerian Flour Mill. All right. Let me take this one after this banking stuff. Then I will look at the international national Nigerian breweries and international breweries also. So let's check UBA. UBA also did not really pull back. So let's ignore UBA for now. No pullback, no discounts for fresh entry. No discount for fresh entry. We've checked Access. Access also did not really give us discount, especially when we want to look at the commission we want to pay. Because I want to compare the commission again. If I buy here now and they're already charging you like let's say 2%, 2.5%. To add 2.5% to this 3.8%, that's almost 6%. So you are already giving a risk of what's it called now? 6% for a target of 9%. It's not a good risk reward. So let's ignore this trade. If it pulls back more, it's better. But as it is now, those that have it can hold it. But for a fresh entry here, especially those that bought when we were buying around 20 naira or so, I still have it and I'm still holding it for a breakout. If it breaks out, then we now ride it and see where we are going to take profit. That's if we want to take profit. But I don't think I want to take profit. I just want to hold that stock and keep collecting dividend in that particular stock. So I think those are just the banking stock that we have to look at. Infinity,
Coach, why do you want to hold on to access?
Shame me? Okay.
Yes.
All my stock they is just for trading. It's not only trading that I want to be doing. I just want to even hold one for investing and see how it plays out. This thing is more like what's it called? I'm just doing like a research. I want to see. Let's see whether after 1 year, maybe the invest the or dividend plus capital appreciation will pay out more than selling. I've sold some stock also that later skyrocketed, but those ones are actually for trading. This one, I just want to see how it feels investing. It's not, I don't just want to be buying and selling, buying and selling. Let me even stay with one and see how the long term game will look like. That's just the reason why I'm holding it. I'm not holding much anyway. I'm not holding much, just but I want to see how it feels to even be collecting dividend, whether it's even worth it.
Thank you.
That's my reason. So Zenith is the one that I'm now looking at now. So even if you want to buy Zenith for a long time, I think this discount is good at this level, and Zenith pays good dividend. So if you get it here, it's good, at least for your first entry. Remember, we still have this candle low opening, and we are inside what, a fair value gap here. So I'm looking at a lot of things that may hold this price, that may not allow it to come down lower. This is actually a fair value gap. The low of this one versus the high of this one. Sorry.
If you want to compare Zenith and FCA and Access for long-term holding, which will you choose? I know you have Access, but which
I
you
will
choose?
choose Zenith.
So why don't you sell your Access and
I use it
enter
to buy
Zenith?
Zenith, Abi. Well,
Yes.
I'll still buy more of Zenith anyway. Maybe later I can now consider. You know why
Okay.
I'm buying, and what's it called? Access. Access price is cheaper. Access is around, is trading at 20 something compared to Zenith. So if I can pack more of Zenith and of Access at lower price, do you understand? So I think it will
Yes.
pay more. Yes, because if one Access now and one Zenith can get three Access, you get it. So
Yes.
if Zenith is paying me what now? Let's say Zenith pay 5 naira and
6
Access
naira.
pays
You paid 5
six
last year.
naira. Yes, 6 naira. And let's say Access paid 2 naira. So 2 naira times three is still that 6 naira that I'm looking at. So almost everything. Then Access has room for more capital growth by my from what I'm looking at now than
So what's
Zenith.
surprising is GT and Zenith used to compete together,
Yes,
but
and
GT
now
now has just left
you see,
Zenith.
so that's how this thing is. You just rotate it. They can just rotate it. See where GT is now. See where Zenith is. GT even touch 100 naira. So most likely Zenith also can touch 100 naira, but access to will not remain the same. If those stocks are touching those prices, access will not remain the same. Okay, let me see if this 5 minutes that I have can quickly just do this little analysis that I have for calculating risk. So what I just come up with is, in forex market, the way we calculate risk is different, maybe slightly different, maybe, or maybe I'm the one that is not you actually calculating it right. Before you enter a trade, you want to know the risk on that trade. If that trade is going to be, let's say, 50 pips risk now, it is based on that 50 pips risk that you will use to calculate your position size. So if that 50 pips risk, you now convert it to money. Let's say on each trade, I don't want to risk more than $10. So that 50 pips, I will now convert it to that $10 what? So what is that risk in $10? So whatever it gives me will now be the investment that I will invest. So if I lose 50 pips will translate to $10. So no matter what happens, that 50 pips will translate to $10. So what I come up with is now, okay, instead of looking at the risk here in percentage, I was saying, okay, the percentage risk is 6% here now for 11% target. Let me now convert that 6% now to money. Let's say I want to take GT as a trade now, and the risk that I can see now is 6%. Then I'll come here, just in mind is a simple formula. Let's say my risk, I don't want to lose more than 50,000 naira in that trade. Then what is the risk percentage? I said it's 6%, right? I say 6%. Then just putting in that, you tell me for that risk, for me not to lose more than that, I should not invest more than 800,000 naira, 833,000 naira in that stock. So I will now pick that 833,000 naira. It now depends on how I want to now spread it. Do I want to be buying, uh, maybe I'll buy 100,000. If I get discount, which is fine, I buy, or I buy everything at once at the current risk. So that will be my risk. Let's say my risk, I don't want to lose more than 5,000 naira. Because when we look at percentage at times, we will not know, we might be looking at it's just 5%. But 5% of what? If it's 5% of 10 million naira, that's like how much is that? That is 500,000. Can I afford to lose 500,000 on a trade? So this is how I will look at it. Then if my risk is just 5,000 naira and the percentage risk is just, let's say, 10%, then how much should I invest? I should not invest more than 50,000 naira in that trade. So let's now go and use it to take those examples. That's why I said let me leave those analysis. Let's check for access. Did I put anything on access? So for access, did I put, okay, let's now say for access. And I say the risk is 3%. Let's say 4%. If 4% is the risk, and I don't want to even lose more than 5,000 naira on any stock that I'm buying, just put that's 5%. So for this one, I can invest more. I can invest 10,000 naira, and my risk will not be more than 5,000 naira. That's what it means by using that calculator. Then which other bank? Zenith. For Zenith, let's look at the risk. So if the risk on Zenith is still around 5%, and let's say on Zenith, I don't want to lose more than 10,000 naira. Put 10,000 and the risk is 5%. So what you should invest should not be more than 200,000. So put 200,000 naira in that trade. If it goes against you, what you will lose in monetary term is just 10,000 naira. I hope we understand how this thing works now. It's just to use that percentage, just use it to calculate the, the the worth, the value in money, and from the value in money, then use it to project how much you should invest in the trade. Which other trade did we take? Okay, I just remember that some people dropped some stock. Let's check international bureau. So for international bureau, are people still looking at this international bureau? I've sold everything, but let's see if we can still get entry. The way it used to happen, international bureau is actually at a good price to buy. Let me check it on the monthly. Ah, we are actually entering, you can see now, actually at a good price to buy. And the momentum has not really gone too high. Look at how it went here. Look at, so it's still, the momentum is still intact from what I can see. But we are entering into a very technical zone. This zone acts more like a resistance because it was a support. Price used as a support, broke it, came into it as a resistance. The confirmation of this trade is that we see a continuation. If we see a continuation, then we can now start trading it up. Should we buy? Let's measure the risk. So if a risk hit to this level, let's hope for a breakout. And if the market breaks out, let's take it back to this high. I'm looking at this high. So what's the risk? The risk is 23%. Let's say I want to take this trade. And my risk, I don't want to lose more than 10,000 naira. Or let's see, can I? Okay, 10,000 naira is fine. And the risk is what? 23%. So how much should I invest? Invest 43,000 naira in that stock. And if you don't want to lose up to that, say what I want to lose is 2,000 naira. So buy the stock, just 8,000 naira, and you will be fine. The risk is going to be 2,000 naira instead of looking at it as percentage. That's how we look at this trade. I'm just somehow because you know why? Anytime I buy a stock and stay there for too long and it did something like this, I will want to wait for pullback. I like pullback. I like entering on pullback, and my pullback signal is like I want this awesome oscillator to come down to the negative side. You see, this is weekly, but let's check it on the daily whether it has crossed to the negative side. It should have crossed to the negative side on the daily. Okay, it has crossed to the negative side. So we can use a daily momentum to enter. And if you enter on a daily momentum, it's good. You can take this trade anyway. You can take this trade. So that is the analysis for that. International Bureau. Let me check International Bureau. Okay, I just checked International Bureau. Okay, Nigerian Bureaus, MP. And that will be the last stock we can look at. Okay, you see that Nigerian Bureaus also did not really pull back anyway. But let me see if we have a resistance. Okay, you see, then the momentum is strong here. Momentum is strong here. This is also a good trade. Momentum is strong here. Maybe both of them will do well. The momentum is strong there. So what we will do is, if you buy it here now, so if I buy it at that price, what's my risk? 12%. Let's look at risks in 12%. Or let's use 13%. If the risk is 13%, and on that trade, I don't want to lose more than 5,000 naira. How much should I invest? 30,461 naira. Okay, so that is all that we can take tonight. So until next week when we look at the market again, I'm wishing you all the best of the week. Enjoy your trading. Thank you.